So, you hear that Venezuelan oil is back on the market, and right away, your brain probably jumps to one question. Is this going to make my gas cheaper? I mean, it seems like simple math, right? More supply equals lower prices. But the real story, oh, it's way more interesting and honestly, a lot more complex than that.
Welcome to Thoughts on Investing. In this explainer, we're going to pull back the curtain on this whole Venezuelan oil situation. We're going beyond the headlines to show you why this isn't really about the amount of oil at all. It's about a very specific type of oil and how it fits into the US economy like a key clicking into a lock.
But before we get into the nuts and bolts of all this, refineries, geopolitics, the whole shebang, we gotta cover the essentials real quick.
So, just a quick reminder for everyone, this is all for educational purposes. It is definitely not financial advice. Energy markets are, incredibly sensitive to, well, everything. So please always do your own research. Okay, with that out of the way, let's get to the big question.
This is it. This is the question that's on everybody's mind. It's what drives this whole conversation. Are you actually going to pay less for gas because Venezuelan oil is flowing into the US again?
And the answer is, well, it's probably not what you're hoping for. And to really get why, you have to be in on a little secret of the oil industry. A core concept that most people have no idea about. But once you see it, the entire picture just snaps into focus.
And here it is, not all oil is created equal. I mean, not even close. The physical qualities of crude oil, what we call its type, are often way more important than the sheer amount that's out there. This idea is the absolute key to understanding the entire Venezuelan story.
Okay, so crude oil basically comes in two main flavors. You've got your light sweet crude on one side. Think of the shale oil we get here in the US. It's the easy stuff, It flows well, it's low in sulfur, and it's pretty simple to turn into gasoline. But then you have heavy, sour crude. That's Venezuela's specialty. This stuff is thick, almost like sludge, and it's loaded with sulfur. It's a real beast to process, and you need some serious heavy-duty machinery to handle it.
So here's the kicker. There's no such thing as better oil. It's all relative. The best crude is just the one that's a perfect match for the specific refinery that's going to process it. It's all about the machine. And that brings us to the real stars of our story.
So let's talk about these incredible, highly specialized machines down on the US Gulf Coast. These aren't your grandpa's refineries. These things are some of the most complex and sophisticated industrial sites on the planet, and they were built with one very specific type of job in mind.
And this is their genius business model. Think of these Gulf Coast refineries as master chefs. They go out and deliberately buy the cheapest, toughest ingredients, that heavy, sour crude that other, simpler kitchens can't handle. Then, using their specialized equipment like cokers and hydrocrackers, which are kind of like giant industrial pressure cookers, they upgrade that cheap gunk into premium products like gasoline and diesel. Their profit? It's that huge price gap between the cheap stuff they buy and the expensive stuff they sell. They're literally built to turn a profit on this exact type of oil.
Okay, so if these refineries are hungry for heavy crude, where are they getting it? This is where the story takes a fascinating turn, because Venezuela's oil isn't really competing with the stuff coming out of West Texas. No, it's in a head-to-head battle with another heavyweight supplier.
Let's be crystal clear on this, because it's the number one thing people get wrong. Venezuelan crude does not compete with US shale oil. They're different products for different customers. The real fight, the real competition for those specialized Gulf Coast refineries is between Venezuelan heavy and Canadian heavy crude.
And just to put this all into perspective, take a look at the production numbers. The US is cranking out over 13 million barrels a day. Venezuela, they're under 1 million. So this was never a story about Venezuela flooding the market and tanking prices. This is about a niche supplier bringing a very specific, highly sought-after product back to the table.
So how does this competition play out? Well, both Canada and Venezuela make that heavy, sour stuff that the Gulf Coast refineries love. But check out the logistics. Canadian crude has to travel thousands of miles through pipelines that can get clogged up with bottlenecks. Venezuelan crude, on the other hand, just hops on a tanker and takes a relatively short trip by sea. For years, that efficiency and its perfect chemical makeup made Venezuelan oil the top choice for these refiners.
Okay, so now we can finally zoom out and see the big picture. The US government's decision to let more Venezuelan oil in. This isn't charity, and it's not really about lowering your gas prices. It's a cold, calculated, strategic move with some very clear benefits for the United States.
It really comes down to three things. First, the refinery fit. It's the perfect food for our most valuable industrial assets. Second, supply security.
Getting oil from a neighbor is a whole lot safer and more reliable than shipping it halfway across the world from unstable regions. And third, geopolitical leverage. By controlling the flow of this oil, the US gains a ton of influence in its own backyard.
All right, so we've got the what and we've got the why. Now let's do what we always do. Let's follow the money and figure out who's actually winning and who's losing from this whole shift in the supply chain. This scorecard really says it all. The huge clear winners are those US refiners on the Gulf Coast. They get their favorite food for cheaper, which means bigger profits. The group feeling the pressure, that's the Canadian producers, who now have a major competitor back in the game. US shale producers, they're pretty much neutral. They're selling a totally different product. And us, the US consumers, well, the impact is limited. It might put a little downward pressure on prices, but it's not the silver bullet that's going to slash your gas bill in half.
And, this quote from the source material just perfectly captures the whole thing. This is a story about refineries, first and foremost. It's a structural shift that helps a specific industry. It's not some massive signal that the whole oil market is about to go to the moon or fall off a cliff.
So the next time you hear someone talking about Venezuelan oil, you'll know the real story. It isn't about the price at the pump. It's about this hidden industrial dance between a very specific type of oil and the very specific machines built to eat it. It makes you wonder what other simple stories are really about a perfect, profitable mismatch. If you enjoyed this explainer, please don't forget to like and subscribe to the channel. Thanks for watching.